Welcome to the Big Four Accounting Firms podcast brought to you by big4accountingfirms.com. Now, in today's podcast, I wanted to discuss a recent article on theguardian.com, and it was an opinion piece criticizing the Big Four accounting firms, and it was released on June 3rd, I believe, and it was a really good article, and the title is "The Big Four Firms Are Incapable of Unwinding Their Own Deep-Seated Conflicts." And it's a little bit confusing the way it's written and the conclusions it gets to, because the article is obviously about the PwC Australia scandal and all the implications for PwC that comes out of that. But it also mentions the E&Y split up. But first off, it starts out just talking about the size of the Big Four accounting firms. They have $190 billion in revenue, which we talk about on our website. But it also says that there's a lot of potential revenue in Australia with $2 billion of outsourcing services to the Australian government. And we spoke about that when we talked about the PwC Australia tax leaks. And this is a huge implication for the Big Four accounting firms because there's a lot of revenue that they can lose there. And what the article says is that the Big Four accounting firms are these huge entities that don't really have an approach to how they do business. And the article says that PwC says themselves that their purpose is to build trust in society and solve important problems. But they weren't able to do that in Australia. And it also says that it's not easy to discern a strategy of the Big Four, which I agree with. And an example they cite there is PwC, where PwC says that they work with businesses, government, and community to deliver solutions and sustained outcomes. And the article says this is unhelpfully vague, and a sustained outcome could include bankruptcy or civilizational collapse. Now, I agree that whenever something says sustained outcomes, like what is an outcome? An outcome can be positive or negative, but I'm pretty sure that's why PwC phrases it that way. And I don't think the Big Four are capable of a civilizational collapse, but it's funny that this person thinks it's possible. I think this article also points out, this opinion piece, points out how people view the Big Four accounting firms. People view the Big Four accounting firms as the be-all, end-all of like being a doctor for financial health. That the Big Four accounting firms come in and they go through everybody's ledger, whether it's a government, a company, they look at every single transaction that a company undertakes or a government undertakes. They audit every single transaction and give every single transaction and the way it's accounted for a thumbs up or thumbs down. And that's just not the way it is. And it's not the Big Four accounting firm's job to do that. Now, do the Big Four accounting firms do a good job of explaining that? No. And if they did, less people would probably use their services because they paint them, as we said in these mission statements, they paint themselves as the solvers of all. But what this author, or these two authors, pick up on is there's no really good there's no strategy. The Big Four, as we've said on this podcast many times, what they really do is they're outsourced services, and any service that requires a lot of physical professionals, the Big Four want to do. And that's their mission statement. They want to do that, and they want to make money doing that. Now, they don't care about the risk because they've obviously blown up many engagements where the risk far outweighs the revenue, especially here with the Australian government. And the author picks up on that, where it's $2 million of revenue that is going to end up costing PwC hundreds of millions of dollars around the world, not just in Australia. They're going to lose a lot of money in Australia, but they're going to lose a lot of money around the world as these countries are now very organized. And it's going to affect their brand. Governments are not going to trust PwC because of this. But another interesting thing that this person picked up on is why should you use the Big Four? How can they be trusted to help communities when they help corporations avoid taxes? Now I think that is to me, that's a little bit political, because you would say that what you're saying there is that all governments are good and all governments should be allowed to collect as much tax as possible without companies interpreting tax laws. So it's, whatever the regulations or the law says, companies aren't allowed to be confused by that, and they're not allowed to hire people to help them interpret that to pay the least amount as possible. And if a company pays less tax, then that benefits nobody. That's not true, because there's shareholders, and shareholders include regular everyday people. They include pensions, which a lot of people have. They include retirement plans, a lot of people have. I think that's where people get confused. Now, what the Big Four did in this situation is they're on both sides. They were helping the government understand what companies do to avoid taxes and helping them draft laws. And they're on the other side helping their clients. That's what the Big Four do. They're on both sides all the time. Again, they're trying to have as many engagements as possible to generate the most revenue. And that's their strategy. And they don't consider the reputational risk to the firm. And the article does a good job of pointing that out. There's no central board that reviews everything, because there's when you get an engagement in the Big Four accounting firms, you have to go through a whole risk process, and that takes a lot of time, depending on the levels of review by the partners. But it typically goes through senior partners. But to go global for every single engagement is ridiculous, and an engagement of this size would not have a. No, I bet you, to be honest with you, I bet you an engagement like this probably did go to very senior people, because it's with the government. And typically government contracts, they know they're high risk. Now it's just incompetent people. So I think people take some cases with the Big Four accounting firms and they paint a broad brush, right? Okay, we have to split up the Big Four because of this. No, you just have to get rid of the idiots inside of these firms, which there's plenty of. And honestly, it wouldn't take that long to find these people, because I'm sure the partner that did this was an idiot. Not saying he wasn't technical, but I'm saying he was probably unethical, did a lot of unethical things, and there's a lot of signs before this. Because there's plenty of Big Four partners that are unethical, and it's easy to figure out they're unethical by the way they work with companies, by the way they work with their teams, and it wouldn't be hard to get rid of these people. And I've mentioned that before. You have to penalize the unethical people, and that would include firing them. And you have to reward the ethical people. And the Big Four do a lot of things like this. They have a lot of projects celebrating diversity, environmental, social, blah, 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 internally. Now, in all these infinite internal things that the Big Four do where they reward people, they can also reward ethical behavior and put that on the front of their web pages, in their email newsletters, etc. They don't do that currently. They might spotlight it every now and then, but they don't really encourage people to speak up. If they do, those people are usually coached out or put to the side, and there's plenty of stories about that. We've covered those. It's been a couple of years since I've seen one of those, but those do happen pretty frequently. So I don't know that painting with a broad brush is really going to do anything here. It's the same old, and it's the way the Big Four are structured, because they're these partnerships, and these partnerships don't have a lot of oversight, and these people don't have a long view of the future. But another good point that this person brought up was that what E&Y did was the right thing. And that's what I said on this podcast, and I'll continue to say that them seeking to split up to avoid conflicts of interest that are real, so that they can, now it was a profit motive. The profit motive was so that the consulting can do more work, and so the firm could go public. But after they went public or split off, they would no longer have these conflicts of interest, and the audit organization could be more pure and could be more trusted. So it was a profit motive, but that profit motive would have led to more ethical behavior. EY was doing two things right. It was going after more profit and it was doing it in an ethical manner. Now, it fell apart because, like this person said, there's no clear strategy and there's probably a lot of bickering. And if the big four accounting firms don't want to split themselves up, and we know KPMG doesn't, even though they have the most scandals, then if they don't split up themselves, then they're going to be split up by regulators. And I agree with the authors on this one. I agree with that. They are going to be split up whether they want to. And whether that's on a global basis that they split up or a regional basis that they split up, or are going to be forced to be a smaller organization. Like PwC is probably going to become a lot smaller organization in Australia. This is going to have large implications for them. So it's whether they want to split up on their own timeline or whether they want to split up on a governmental timeline or clients reducing fees with them. Like it's up to them. And it's probably better that they do become smaller organizations since they don't really have a clear goal and clear ethical behaviors. It's better for them to shrink themselves. I mean, they've done it before with, like the author mentioned, Enron and Arthur Andersen. But that was 20 years ago. So I think the point that they're trying to get is there needs to be a purge or a cleanse of the big four every now and then where you split off the consulting. Because we know what's going to happen even if the big four split up. The audit and the consulting, et cetera, will split up. But then the audit will slowly start building consulting up because the clients will be asking their auditors to do more. Or the audit partners will see something and they'll say, hey, we could help our client. Let's spin up a consulting practice. And they'll buy consulting firms and they'll become big and big again. So I think it's the author sees it the right way where an audit or these auditing firms that grow huge consulting practices and the consulting practices and good economies grow to be really large organizations, then they're even larger than the audit firm, then there's big implications there. And I think they're right from that perspective. But it's just it's a very interesting piece. And there's some good insight, but there's also some conclusions that are drawn there that are just not correct. So that's why I wanted to cover it in this podcast. I'll include a link to the article and a link to our write-up of the article in the show notes. So make sure to check that out and make sure to subscribe to this podcast. And thanks for listening.